It's a little after 9 o'clock on October 8th, and today's the first track meet for Noah of the season, and we let him drive himself there this morning. And the thing I want to talk about today is tax write-offs, which I know sounds like a boring thing, but if you know that tax write-offs exist and you know some of the principles around them, then you will save yourself over the course of a career probably millions of dollars in taxes that you shouldn't have to pay. So let's talk about some of those principles of tax write-offs. First thing is, if you get yourself an LLC, so you pay the money to register an LLC, doesn't matter the name of it, doesn't really matter what you do in your LLC, you just need to create one. That allows you to start reaping benefits of all the major tax write-offs that I've used over the years. And once you have an LLC, then you can start to do pass-through tax write-offs, which are things like spending money on business expenses of any kind. That includes travel, meals, spending money to improve your building or office, spending money on equipment or assets, or spending money on advertising. Those are all really good categories that will probably always allow you to do tax write-offs. There's some advanced strategies that I didn't know about until last year because I have a good CPA now. But he taught me 3 particular strategies that I've used now successfully not to pay any federal income tax. I still pay state taxes because you really can't get out of those. But instead of paying $50,000 a year in taxes, I now pay $3,000 a year. So that's a lot of money I can now put towards building more wealth. And the principle of a tax write-off as it stands right now, the IRS code that governs taxes and what you can write off and what you can't, the things that are probably always going to be available to small businesses are those business expenses that I just listed off. Now I'm going to tell you 3 advanced strategies that I use currently, which may or may not exist by the time you watch this video, but they exist right now in 2022 and probably for the next couple of years or so. The first one is called the Augusta Strategy, and that is the idea of renting your home from your business, renting your home from yourself to do business related activities and meetings. And I don't exactly understand how it works, but there are some documents that you have to prepare, and there are some rules and caveats surrounding how much you can write off and under what circumstances. But I fit all those rules. And if you'll remember in one of my other videos, all systems can be hacked, manipulated, or just outright cheated. I'm not doing any of those things. I'm operating within the system of rules that exist, and I'm checking all the boxes and avoiding taxes by doing so. And that's how wealthy people do it. There's no secret. You just have to understand or hire an expert to help you understand, which I had to do. The second strategy is having the ability to pay your kids, essentially you guys, money up to $12,000 a year per kid to work for your company. And this is not kids on the payroll. This is just funneling money from one business account to another business account to the kids' account. And again, there are rules and caveats and regulations around this strategy, but that is essentially how it works. And it's up to $12,000 per kid per year. And again, I don't know if this strategy will work forever, but it does right now, and I'm going to use it as long as I can. And it lasts up until the kids are 18 years old. There's no real set date on when you can start paying your kids this much money, but you have to document that your kids are actually working for you, which both of you guys are at this point, and you know what you do, and it's easy to document that sort of stuff for us. So again, I'm following the rules, regulations, and systems to the letter of the law, and then using that to my advantage. The third strategy I'm using right now, which it'll probably go away by next year, but it's called the COVID relief payment. And there you can pay yourself a chunk of money, just take it straight out of the business bank account and put it into your personal bank account. And there's probably a little bit more paperwork involved there. I think my CPA takes care of that, but you can pay yourself up to $15,000 a year, I believe, in just COVID relief payments. And so there's always strategies you can use, and they can get complicated and you can get lost in the details. But as long as you have a CPA that you're working with who's helping you work through those things that you trust and that has a good long track record of being honest and who has helped a lot of other people legally avoid paying taxes, then you should definitely think about getting that CPA sooner rather than later.